let me try and understand from you why, right? So, okay, why pharmaceuticals, and more so at the current point of time, wherein everybody's talking about how the world may be at a risk of a slowing down or cooling off period, and therefore it might be better to concentrate on inward-facing cyclicals as opposed to export-oriented plays like pharmaceuticals and IT. So why is it that you such a large overweight on pharma, and particularly why would you maintain it at the current point of time? Just trying to understand the logic.
Absolutely. No, a wonderful question here. So most of the companies that we own in pharma are domestically oriented. So we are actually buying companies which have very strong domestic businesses, and that we are most bullish on. We are not that bullish on in terms of the global side of the pharma. It will do well for some companies that we own, but it is not something that we think is going to be a major growth driver. According to us, the domestic pharma business will be a large growth driver, and that's really what we are playing. And those cash flows again are very steady. You don't see too much fluctuation in the domestic pharma cash flows. Capital allocation was, I think, the bigger challenge for these companies. You know, a lot of these companies had made capital allocation decisions which were not the best, and a lot of them have corrected, done the course correction, have kind of ensured that the capital allocation efficiency improves dramatically. And I think that is very, very positive for the whole sector. And that's visible in terms of their free cash flows, as well as a lot of these companies now having zero debt or net cash on the balance sheets.
Okay. And do any or some of your portfolio names also benefit from the current or potential PLI schemes? Because there's a lot of chatter around how domestic pharmaceutical companies would make use of that, both for local as well as global opportunities.
Not that I know of, at least currently. I think our plays are more domestically oriented. So again, the PLI is more focused both for domestic and for export kind of thing. Even if there is, which I don't know of in one of our or two of our companies, it will not be something which moves the needle for them. So, you know, it is not something which is going to be very significant for any of them. So from our perspective, it is more than the existing and the visibility of future consolidation in the industry. I mean, we keep joking internally that pharma is where maybe FMCG was 10 years back in terms of the growth opportunity, at least domestically, I'm saying. And healthcare overall, you know, clearly as the economy grows to maybe $3,000, $4,000, $5,000 per capita, one of the things which will happen is increase in healthcare spends. And the second theme will be the consolidation, because top 20 pharma companies even today have less than 40% of the market. So, you know, for us, I think those are the opportunities that we are playing on.